Hey everyone, in today's video we are going to discuss about a stock that is part of portfolio of two celebrity investors of our country, Ashish Kacholia and Vijay Kedia. It's Vaibhav Global. Both Ashish Kacholia and Vijay Kedia are known for identifying small cap and micro cap gems that generate multi-bagger return on their investments. And both these investors have invested in Vaibhav Global. And when both investors are investing in the stock, then there would be something interesting, isn't it? Now, if you look at the share price of Vaibhav Global over the last 3 years, its share price has seen a crazy roller coaster ride. Before COVID, it was trading near the levels of 150. And during COVID, Vaibhav Global shares zoomed exponentially to levels of 1000, generating more than 6 times return within a span of 14 months. However, in last 20 months, the share has nosedived. Its share price has tanked 70% to current levels of 300. So in today's video, we are going to discuss what went wrong with this multi-bagger stock and try to understand the future. Alright, let's get started. The answer for 6-time jump in Vaibhav Global share price during COVID and then 70% correction lies in the business model of the company in terms of how it earns money. So basically, Vaibhav Global started its journey in 1980 as a conventional gem store exporter to the US. Later, it started supplying studded jewelries to US giants like Walmart, Macy's, and various other B2B business. Later, Vaibhav Global completely focused on retail sector of US with offline stores. But when US was hit by financial crisis in 2009, Vaibhav Global shifted its model from high street retailer to a deep discounted tele-shopping company where it offered low-price jewelry at almost half the price of competitor in the same segment. Today, Vaibhav Global is a vertically integrated fashion retailer with multi-channel presence across platforms like 24/7 proprietary TV shopping channel, e-commerce website, mobile app, smart TV, OTT platform, social media platform, influencer marketing, third-party marketplaces, and so on in US and UK. Recently, it has also expanded to Germany. It also operates through marketplace model in Canada and Japan. Apart from this, its products are sold on all major e-commerce platforms including Amazon, eBay, Walmart, etc. So basically, Vaibhav Global sources raw material from almost 30 plus countries including India, China, Nepal, Bhutan, Thailand, etc. and manufacture products in India and China and sell them in USA, UK and now recently in Germany, Canada and Japan. Now if you look at the business, Vaibhav Global has two major product categories, jewelry and non-jewelry, that include your fashion accessories and lifestyle product. Within jewelry, it includes all type of products like your bracelet, necklace, earring, rings, etc. And all these jewelries are available in various gemstones like your diamond, gold, ruby, emeralds, sapphire, etc. They also have their own collection of brands. Now within non-jewelry, they sell all type of products. For example, in fashion, they sell t-shirts, jackets, sweater, activewear, sunglasses, hats, footwear, and so on. Then they also sell home products like bedding, wall decor, lighting, etc. They also have beauty segment that sell products in category like skincare, makeup, nail care, hair care, etc. So basically, it is an end-to-end shop for jewelry, fashion, and lifestyle products. Now, as far as revenue breakup is concerned, jewelry contributes around 70% in the business and remaining 30% comes from lifestyle product. And in terms of channel breakup, 64% revenue came from TV in FY22 and 36% from digital platform. And this digital platform is growing quickly. And in terms of geography, US contributed 70% and remaining 30% comes from UK. Now that you got a clear picture of their business, it's pretty straightforward to understand the reason behind the roller coaster ride of Vaibhav Global share price. During COVID, due to lockdown, people could not shop from retail outlets. So the only option was online shopping and TV shopping. And since Vaibhav Global completely operate on online and TV model, its sales and profit zoomed exponentially from 190 crore in FY20 to 272 crore in FY22, representing 77% jump. At that time, Vaibhav Global was trading at levels of 150 at a market cap of around 2,500. So it was a very small cap company. So the exponential rise in its profit and crazy liquidity during 2021 resulted in huge demand for its share. Hence, its share price jumped 6 times to levels of 1,000 rupee. However, the moment economy opened up in US and UK, people started going out. and it badly impacted the sales of Vaibhav Global. Its earning tanked from 272 crore in FY22 to 139 crore in trailing 12 months, representing 49% fall. Moreover, in 2022, we saw liquidity drying up. Hence, people who made crazy profit during COVID started profit booking. As a result, today Vaibhav Global has tanked 70% from its peak. The reason for this sharp correction is mainly because both US and UK are now facing slowdown, and the major business of Vaibhav Global is into jewelry, which is a discretionary product. It's not a necessary item. So the demand for jewelry would take a lot of time to recover, and that lack of visibility in earning recovery resulted in sharp correction. But mind you, in spite of 70% correction, Vaibhav Global is still trading 100% above its pre-COVID level. Okay, before we proceed, I want to inform you that I am now also available on Spotify. So if you like to listen and watch podcasts, you can search my podcast with name Personal Finance 101 with Sahil Badvia. And if you want to learn every aspect of stock market and money management, I have an entire course. Do check it out. Now, if you look at the shareholding pattern of Vaibhav Global, there are two celebrity investors that have Vaibhav Global in their portfolio: Vijay Kedia and Ashish Kacholia. Vijay Kedia is holding 1.95% stake as of December 22. In fact, he is holding Vaibhav Global as long as data is available, and Ashish Kacholia is holding 1.21% stake in the company. Again, he is holding it as long as data is available. Now, the most interesting analysis is that in spite of generating more than 6x return during COVID bull run, both investors did not exit their holding from the company. Although Ashish Kacholia did reduce his holding over the quarter, but still holding a significant share. In fact, Vijay Kedia has also sold some holding, but in June 22 quarter, he actually increased his stake in the company. So in spite of crazy correction in share price, both investors have kept confidence in the company, and in fact, Vijay Kedia actually increased their stake. This shows the confidence of these celebrity investors in the company. Now, what could be the reason? The reason is whatever happened with Vaibhav Global business was due to external event. It resulted in sharp earning growth during COVID and sharp fall when the economy opened up, and the stock price also followed the earnings. However, is there anything wrong with the fundamentals of the company? The answer is no. If you look at the leadership of the company, Mr. Sunil Agrawal is the founder and MD of Vaibhav Global. He is a commerce graduate with an MBA from Columbia University, New York. A first-generation entrepreneur, he established Vaibhav Global Enterprises in 1980. Under his leadership, Vaibhav Global sales have compounded from 32 crore in FY97 to 2,752 crore in FY22. That's 84 times return in last 25 years. And profits have zoomed 66 times. While its market share since IPO has zoomed 331 times. These are phenomenal numbers. In fact, in last 5 years, Vaibhav Global revenues have seen a consistent growth, and earnings have also grown consistently except for the latest correction post-COVID. Company has a very high profitability with both ROE and ROC about 20% and has negligible debt to equity of 0.14. Company is also consistently generating good cash from operation. So fundamentally, there is no problem with the company, and it is still a small cap company with market cap of 5,000 crore rupees. Now, as far as future growth is concerned, we can look at it in two ways: near-term growth and long-term growth. So for near-term growth, I was reading their latest con call report, and management mentioned that there is still a high inflationary environment in US and UK. Moreover, consumer is spending a larger share of money on experiences rather than product, having stayed indoor during COVID. So in the near term, management has guided for around 2 to 4% growth in FY23 and mid-teen revenue growth in the subsequent years. Companies investing on OTT platform, marketplace, and proprietary website and apps. And this segment would see a good growth in the future. But since there is still a lack of growth visibility due to current slowdown in US and Europe, I think it's better to wait and watch. Although after 70% correction, the valuation looked decent, but there is no major trigger for growth in the near term. So if you are already invested in Vaibhav Global and haven't sold your holding, then I would suggest not to panic. The biggest moral support is from the fact that both Vijay Kedia and Ashish Kacholia are holding significant share in the company. Although it will take time to recover, but eventually I expect business to do well in the next 3 to 5 years. But if you haven't invested, I think it's better to wait and watch for a couple of more quarters to get a good visibility of their earnings. I don't want to stress this video further. The intent of this video was to help you understand the reason for 70% correction in Vaibhav Global share and how COVID impacted their business positively. But later, when situation normalized, the business got negatively impacted. It's a great case study. Similar thing happened with entire pharma sector. Here the key is to understand the reason for correction. Is it due to external factor or there is something fundamentally wrong with the company? In case of Vaibhav Global, there is no fundamental problem. So that's a good news for its investor. But it is a good lesson to not get carried away when the company is growing exponentially. We have seen that with chemical sector as well. I think the biggest trait here is to maintain a fine balance between fear and greed. Not to get too greedy and not to get too fearful. I hope you will find this analysis useful. I'll see you next video. Till then, take care.